Getting your daily bias correct is one of the most important things for a day trader to do. In this video, I'm going to show you exactly how I figure out my daily bias every single morning, step by step. This allows me to have clarity on the charts, know where the market wants to go, and allows me to prepare for my trade before it even happens. And the best part is this process only takes 5 minutes every single morning. It's not complicated and it's very, very repeatable. If you enjoyed the video, leave a comment, like, subscribe. Let's get straight into it. All right, guys, so when we talk about daily bias, there's really only two things I do. Now, I want to make this clear. I am a little bit different than most ICT traders or even traders in general. A lot of traders, what they will do is on Sundays or even before the market opens, they will go onto the higher time frames. They'll look at the daily, the weekly, and even the monthly, and they'll form their daily bias. Now, why this doesn't work for me is because I'm a day trader, okay? I trade in 90-minute windows every single day from 9:30 to 11 a.m. So it makes no sense for me to do an analysis on the daily time frame, because whether it's going to be bullish or bearish, whether the daily is bullish or bearish, you can still scalp day trading type of moves in that window. Let me show you how I do daily bias. Now, the daily bias is only going to be factored into two major things, which I will write down here. Number one, it is going to be where is price in the daily range? Number two, where is my liquidity? Okay, these are the only things that I care about when discussing daily bias. And again, you can do your research on my track record. Every single month I've been profitable for the last 2 years. I have a very good win rate. I get a lot of payouts, and I don't overcomplicate trading. I'm not looking at the daily and the weekly and the monthly. I'm looking at these two things, and this only takes me 5 to 10 minutes every morning, and I know what my bias is, where I want to take my trades, etc., etc. First of all, let's look at this right here. Where is price in the daily range? Now, a lot of people watching this video might be like, Tempo, what the heck is a daily range? Well, every morning that you wake up at 9:30, price is already going to move because the future market trades overnight. So you will have some sort of established daily range at 9:30. Now, here is the midpoint of the daily range. And basically you're going to have price action. You know, we might either do like one of these, or we could even do like one of these, but price is going to be somewhere when you wake up at 9:30. Now, what I like to trade is something called premium and discount, okay? And I will explain the ideology or the methodology here. Okay, so you have 50% of the daily range, which just means the exact middle point of price in that whole area. If price is above the daily range's midpoint, it is called premium. You are trading in premium of the range. If you trade at the lower end, it is called discount. You're in discount of the range, okay? Now, the idea is that price will always move whatever it wants to do. It might go up, it might go down, but price will always reverse back to the 50% level. And why is that? Because price rebalances, okay? Even in a downtrend, in a bear market, let's just say, price is not just going to go straight down forever. That's not how the market moves, okay? The market will go down, it'll have a little pullback, it'll go down, it'll have a little pullback, maybe it'll have a big leg, and then it will tap back into that 50% level to continue its downtrend. This is what a market leg looks like. It doesn't just go straight down with zero retracement. So the idea is that if we're in discount of the range, so the bottom, right, down here, we want to actually long because we're expecting price to rebalance to this level. And then if we're in premium, right, if price is up here, we want to actually short because we're expecting price to go to this level. All right, so very, very simply, if we're in premium, you want to short, and if we are in discount, you want to long, okay? This is how you trade the daily range, okay? And I will show you exactly how you can mark out the daily range every single day. But this will keep your bias in check. If you're a reversal trader like me, I have found much higher win rates trading reversals, and I have found better RR trading reversals. This is what you want to do. If price is high in premium, you want to short. If price is low in discount, you want to long, because we're anticipating that rebalance, that reversal back to the midpoint, okay? Guys, so now I'm going to show you how to draw 50% of the daily range manually so you can have that level on your chart, okay? Now, this is what it will look like when you wake up. This is 9:20 a.m. right before the New York Stock Exchange opens. So you already have the London session and you have the Asia session already done. So what you're going to do is the daily range starts at 6 p.m. New York time every day. You can write that down. So the daily range will print from 6 p.m. until when you wake up, and that is the daily range, okay? And TradingView automatically, you know, divides that range right there, if you could see on the left. So what you're going to do is you're going to wake up and you're going to identify the low of the entire range and the high of the entire range. And as you can see, I circled both of those levels, okay? Now, what you're going to do is what I like to do. You take the rectangle tool here on TradingView. You draw a box from the high to the low, or the low to the high, that doesn't matter. And the midpoint is going to be your 50% daily range level. And what I like to do is you take the horizontal tool right here and you can just post it right there. And now you know where the daily range is. Now, if you're asking, oh, Tempo, my fair value gap or my box tool doesn't have the rectangle, the little line in the middle, all you have to do is click the settings on your rectangle tool, go to style, and then make sure middle line is turned on, okay? So now, when you have this line drawn on your chart, you know where the midpoint of the daily range is. So up here is going to be premium of the range, meaning you want to short back down. And down here is going to be discount of the range, meaning you want to long back up here. That is how you are going to have your daily bias, okay? So that is the first step. That is the first step of daily bias, all right? I might have lost the text. I think I did, but that's fine. The second thing we want to look at is, where is my liquidity? Okay. Now, I'm going to bring up my indicator here and show you a couple of different examples so you can understand this. All right, guys, so here is my indicator that I have enabled, and you can see this yellow line is 50% of the daily range. Now, I do just want to shout out my indicator. I have developed a custom indicator that will mark out every single level that I use, as well as this daily range level automatically. Because the thing with this daily range level is it's a dynamic level. You don't just set it in the morning and that's the level the whole day. If we make a new high a day or low of day in the New York session, you will have to change that level manually. So what we've done is, again, I made an indicator. It will automatically track that for you, so it's always accurate and you won't have to worry about that. If you're interested, I will put the link in the description below. So here is my indicator. I know it can look a little overwhelming, but it's simple. It's just marking out all my liquidity levels. This is why I had to bring this up, because on top of the daily range, what I will see is, where are my liquidity levels? If you understand the model, you know that we take trades off of high time frame levels of liquidity, okay? So if we're looking at the market right here about 20 minutes before the market opens, what can we see? Well, what you can see here is that price is above the level. So you're like, oh, Tempo, I should be shorting. Well, it is too close to the level, okay? You don't really want to trade near this yellow line because you see a lot of chop, a lot of accumulation. When you want to trade is when you're a good amount above the level or a good amount below the level, like down here. I really don't like trading in this zone right on top of the 50% level. Just trust me, your win rate, your edge, it's going to be a lot lower, okay? So even though if I woke up today and I'm seeing that price is above the yellow line, I don't want to short just yet because we're too close to the level. So what I would do is I would say, where is my liquidity? Well, we have two liquidity levels stacked on top of each other right here. It may be a little bit difficult to see, but we have previous day high, which is PDH. We have Asia high, and we have a 4-hour high. Okay, those are a lot of levels stacked on top of each other. So if I'm waking up and I'm looking at my bias 10 minutes before the market opens, I would say, okay, because we're above the 50% level, I want price to go up here, sweep these liquidity areas, and then I will look for a short while price is up here. That is how I would set my daily bias for this day. So we're going to look through a couple of different examples here so you can kind of get a feel for it. So here's another example here. It's kind of similar to the first example I showed you, and honestly this would even be a neutral bias because we're up here in would be premium up here, and then this would be discount right here, and price again is kind of just opening in the middle of the daily range. So I would wait, for me, if I'm looking at this, I'm going to wait for open, because again, if open happens and we dump down here, I want to sweep this liquidity level and look for longs. But if open spikes up and sweeps these liquidity levels, I want to actually short and go down. So when price, I want to just kind of, I guess, put an asterisk on the last clip. If price opens near the middle of the 50% of the daily range and you have liquidity levels on both sides in premium and discount, it's a neutral bias. We're going to look at some other examples where the bias is going to be more clear, but in this example, I would just say, you know what, I'm going to wait for open and then just see what happens. And again, in this example, you see that price goes down a little bit and then goes up, and then I guess this day just moved sideways. Oh, but you even see there, it swept the level. You can see right there, the level vanished because once it sweeps, it goes away. But price swept one of those levels that I had marked. And then what does it do? It reverses right back into the middle of the daily range. So my bias would have been correct right there. All right, so here is another example right now. As you can see, this is right before the market would open. We are in premium of the range. It is fairly close to the 50% level. I would say a general rule of thumb, you want to be at least 50. If you're trading the NASDAQ, you want to be at least 50 points away from this level to feel safe. Because again, you don't want to trade near it. Just trust me on that. It's very choppy. It's very low probability and it's not good. So right here, if I'm looking, price is only 38 points away from that. So even though I'm below the level, which is discount, I would probably want us to go a little lower, and I would have a short-term bearish bias into a long-term bullish bias. I would say right here, okay, we're in discount. I want price to go for this liquidity level, sweep it, and then I will look for a trade long. That is what my bias would be on this specific day. Because, you know, I just want it to get a little bit deeper in discount and I want it to sweep liquidity, and then I'm looking for my long right there. So that would be my bias. For the last example of this video, this is actually a good example because this is 9:25 right before the market is going to open, and we have a clear bearish bias, because as you can see, the market is actually opening above the yellow line and we have a good draw on liquidity right here. So we know with those two things combined, it is a clear bearish bias. Not only are we at the top of the range, but our liquidity that we would be looking for is below us. So this is a slam dunk, easy bearish bias. We want price to go hit that. And yeah, this would probably be a really easy day if I was trading it. You can see right there, price does end up going for the low. So very easy and clear bearish bias. All right, guys, and that's going to be it for me. Thank you guys so much for watching the video. If you have any questions about daily bias or anything else, let me know, leave a comment. And if you want to buy my indicator, which marks out all my levels automatically, and I use it every single day personally, you can click the link in the description. I'll see you on the next one, guys. Take it easy. Peace.